How's it going, everybody? It's Stas here, and in today's video, we're going to be doing an overall market update, breaking down the Dow Jones, the S&P 500, and the Nasdaq. We're also going to be doing a trading update, talking about what I personally did today in the stock market, plus a bunch of stocks and ETFs that I'm watching and looking to trade right now amidst this crazy stock market that we're experiencing here in March of 2020. And like you all read in the title, I also want to go over and give you all my 2 cents on how low the stock market can get. At this point, from the all-time high, it's down around 30%. And I want to give you all, again, my opinion on, is this the bottom? Are we going lower? 40, 50%? Where do I see this thing going? So if you guys enjoy this video, hit that like button, consider subscribing, and also join our Discord group chat and our Facebook group and claim your 2 free stocks from Webull, valued up to $1,400. And by the way, that promotion actually runs out tomorrow on the 17th. So go get your 2 free stocks, guys. All you have to do is put in $100 into the Webull account using my affiliate link down below in the description box, and you get those free stocks. So let's just get right into it without wasting any time. Starting off here with the S&P 500, which another historic day, guys, down 324 points at the close. I don't know. I just can't believe it. I never thought I would say the S&P would be down 300 points. I feel like I'm looking at, a normal down day for the Dow Jones when I'm looking at a 300-point number, right? But no. 300 points down for the S&P 500 today, which equates to 12% in the red. We were so close to hitting that second circuit breaker. And if you guys don't know, a circuit breaker, what that means is, let's say if the market goes down 7%, a circuit breaker is hit, meaning the market gets halted, and the halt lasts for 15 minutes when it goes down 7%. And we see that happen, I believe, right here, right? We gap down, we hit the circuit breaker, we pause for about 15 minutes, then we gap down even further. We rallied into about 11:15 a.m. Eastern, and again, we almost hit that second circuit breaker, which is if the market goes down 13%, and if that happens, it gets halted again 15 minutes, just like it gets halted for the 7% drop. So almost 2 circuit breakers were hit today. I don't know if that's a record. I'm not sure in the past if 2 circuit breakers were hit in a single day. I'm sure it's probably happened before, but either way, it's crazy either way. Just hitting a circuit breaker in a day is just unbelievable, right? So let's take a look at some levels here on the S&P 500. If you guys remember the sell-off back in 2018, we were actually right around these levels after that sell-off, right? Meaning this level of support right now on the S&P is extremely important. And with everything going on right now, you guys know I'm not going to reference it because I'm going to get demonetized like I did yesterday, but that doesn't matter, right? That's not the purpose of these videos. But, with everything going on, we're at these levels of supports again, or this level of support from back a couple years ago. And if it gets worse, which I'm sure it will, this level of support will be broken beneath of, right? And that's kind of scary because after that, we're getting to levels where we haven't been at in terms of the S&P now, pretty much since I'd say like 2017, 2016 now, right? If we do end up getting down to, let's say, 2000, maybe 2100, if we get down to 2100, guys, 2000, we're getting to a point where we haven't been at those levels for 5 to 6 years, which it's pretty insane, right? And it's scary to think that we're only one more massive red day like today away from being at those levels. Am I saying now that we're going to drop 12% again tomorrow. No, I'm not saying that, right? But let's say we had a 5% drop tomorrow, followed by a little consolidation, followed by another 5% drop. We're going to be at $2,000 on the S&P in no time, right? And again, that's extremely scary. So if we're looking at the S&P here, let's go back to that yearly chart. From where we are now, up to the all-time high, the S&P has dropped 30%. It shaved 1,000 points off of its price in about 1 month, 1 calendar month, that is, even less in terms of trading days. So that is incredible, right? And if we do go to that $2,000 level, that is going to be a point in time where the S&P is going to be down, I'd say, close to 40%. And for me personally, not trying to call a bottom, but I think we're going to break 2,300. I think we're going to break 2,200. And I think, not calling this a bottom because I don't have a crystal ball, but I think anywhere from $2,000, 1,800 at the complete low end. This is me being serious, like my opinion, right? Complete low end, 1,800 to 2,000. I could see this being where the S&P could get to on the worst case scenario, right? And if we get to 1,800, 1,800's more towards the bottom range of this level of support from around 2014 to 2015, as you guys can see here. If we get there, this is going to be overall almost a 50% drop in the stock market. And that compared to the great, the 2008 time period, that is pretty comparable because in that time period, the market went down 50%. So the fact that, it went down 50% then in about a year, 2 years, comparing that to a 50% drop in a couple months, that is crazy because of the magnitude of how quick it dropped this go around. That's if it were to get down to that 1,800 level. But let's say we don't get to 1,800, 2,000, this general area is where I'm looking at least for the S&P 500, right? And if we're taking a look at SPY, I know a lot of you guys track SPY, and this is basically an ETF that just tracks the S&P 500. It's the most popular ETF that people use out there to gauge the markets. This could probably go to, let's say, if we're looking at the macro trends here, I saw someone in my group chat, Discord chat, a couple days ago was saying, based on this trend here on the monthly chart, the SPY could go to, I think it was like 150. 150 is extremely low. That could correlate to, let's say, an 1,800 S&P if it were to get down to that point. Maybe not down to 150, but let's say if the S&P was at 1,800, SPY would most likely be around, I'd say, maybe 200, maybe 190, this general area, and that's kind of where I'd see the SPY maybe bottoming out here. And if we're taking a look, let's say at the Dow Jones, like you all read in my title today, down 3,000 points. What? 3,000 points, down almost 13%. This thing almost hit the circuit breaker at the close of the market. Remember, 13%. This was at 12.93%. So almost there. Let's actually see. I don't think it hit it. I was watching the markets. Yeah, it didn't hit it. But again, it was right there in terms of hitting it. And if we're looking at, the Dow Jones at this point, and we're just taking a look at where this thing could potentially go. I've been seeing price targets on low end 15,000, 16,000, and honestly, I'd have to agree with that. That would be putting us at those levels of the 2014 to 2015 time period here on the Dow Jones and close to that 180 SMA here on the monthly chart. At the low end, that makes sense. It would be around a 45 to 50% drop from the highs. And I'd say a more conservative level, not as far as 15K, but maybe 18K, maybe 18K, maybe 17.5, 18K, which again, one more terrible day like today will be there tomorrow or the next day, right? Which is a very, very scary thing to say. But with, the movement in these markets, with how volatile they have been, I wouldn't be surprised, not saying this will happen, but I wouldn't be surprised if we bounce back tomorrow and then saw a little downtrend or a reversal back to the downside, because that's kind of what we've been seeing, right? It's been a seesaw type of market. Up the next day, down the next day, up the next day, and even intraday we're going up, down, as you guys saw today, especially towards the end of the day when we saw that meeting, and I was actually glued onto my computer listening to the meeting with the president, and I was about to say asking questions like I was there, but listening to all the questions that were asked and all of the answers and so forth. And I'm not going to go too in depth into that, but I do heavily advise you, especially, if you're in the stock market, whatever, go watch that and keep up with what's going on, especially when the president comes out and speaks on the matter. And you guys know what I'm talking about in terms of quote unquote the matter, right? So the Dow Jones 13% down. Incredible day. This is nuts, because if you think about it, 1 year returns are 10%. In a traditional stock market. And the fact that we're swinging 10% up, 10% down in daily increments, that is just something that, honestly, it's slowly becoming, what's the word? It's like, what's the word? It's not affecting me anymore. I'm becoming numb to it. You guys know what I mean? It's like it's nothing, right? Another day, another day. The Dow's down 5%. That's nothing, right? But it's crazy, and I know you guys can relate to it. And let me know down below in the comments, what are your thoughts on that? Now, the NDX, the Nasdaq, down 970 points. Oh my goodness, down 12.19%, just held above $7,000, $7,020 to be exact. Oh yeah, and the word is desensitized. That's the word. I'm becoming desensitized to these market moves. It's like, again, desensitized. Look it up if you guys don't know what that means. That is how I feel right now. So, again, Nasdaq down 979 points, 74 points. Tech stocks got absolutely mauled today. Microsoft down 23 points. Google down 135 points. Facebook down 24 points. Amazon down 95 points. Apple down 35 points. This is absolute blasphemy, right? And really nothing much to say about the Nasdaq in particular, but when we're looking at in terms of longer term price targets, in the longer term trend here, one level that I'm looking at, which I'm sure will be broken beneath of, is 6,400, 6,500. This is, you guys can see it here, the 50 SMA level of support on the monthly chart. If we do pull down to there, overall, the Nasdaq will have seen roughly a 35% pull down. And again, I see this problem being a bit more prolonged, a couple months, as many of you guys will agree with that. So we might see a further drag on the Nasdaq than just another 5% from where we are now, another 5, 6, 7% from where we are now. So that means we may get lower than that $6,400 level. And some levels we may get to, maybe not 5,000, but 5,500 to 6,000. That's kind of the general area I'm looking at, which could put us around a 40 to about a 50% sell-off in the overall Nasdaq. So that's kind of, in my opinion, when we're looking at the three main indexes, how low they can potentially go. And again, I don't know everything, guys. I don't have the crystal ball. These are pure guesses. This is pure speculation. And again, I'd love to know what you guys have to think right now. And with everything going on, with all of these moving variables, it makes it even harder to predict these things, to make these speculations. But that's kind of what makes it fun, right? Because at this point, we have zero interest rates, QE4 or QE5, whatever you guys want to call it. They're starting to kick that in. A lot of liquidity being pumped into this market. The 10-year Treasury bond yield, I don't know what it is exactly, but last time I checked, it was under 0.5%, which is historic. There's just a lot of crap going on right now, a lot of just funky things going on. So just strap up and be ready for this market roller coaster, guys, because if you think this is going to tame down anytime soon, you're wrong. You're mistaken. And this is something that in years from now you'll be able to look back and be like, wow, we were really part of one of the craziest times in the history of the world, let alone the history of the stock market, right? So let me know down below in the comments your thoughts on everything. Now, let's just get into quickly what I personally did in this market today. And like I've been doing on all of these days, really, I traded SPXS today, in and out, a quick little scalp trade, and let me show you guys exactly where I ended up getting in. So I personally got in after this little second dump off here. So we opened up, popped $24, we sold off to about $22. I think this was after the halt, and I personally got in at around $22.57, and this was a very quick, easy trade, right? The goal for me was to capitalize on the fill of the gap back up to the previous resistance, which at this point, you can see it from the halt was around $23, and from pre-market, it was around $23. So I set my limit at around, actually it was more like 23.25. So to play it safe, I set my limit order at $23. So if we got even close to that point, I'd lock in profits, right, because of my limit order, and that's exactly what I ended up doing, right? So from 22, what was it? What did I say again? 22.57, up to about $23. That was the move I made. Roughly 2.2%. I know it's not too crazy. I could have got TVIX, and I could have made nearly 100% of my money if I held from Friday, but I'll take it, guys. Profit is profit. And one thing about holding these ETFs, leveraged ETFs overnight, over the weekend, I don't recommend it. And if you read on the website, and I say this a lot in my videos, if you read on the prospectus, go on the website for each of these different ETNs, read the prospectus, it says it. These are not meant for long-term holding because they decay over time, they lose their value, and that's just kind of the way that they're ran. They're not traditional stocks. They're not companies that are producing products. That's not how these run. They're what's the word? They're derivatives. They're ran like a math problem, very complicated. That is how these are ran. And you have to do more research because the truth is, I didn't invent these. I don't know them. I don't know every single thing about them, but I know how to trade them, and I know how to make money in them, and I know that you're not supposed to hold them overnight, and not especially over the weekend, right? That is what I know for sure. Just a disclaimer, right? And yeah, for me, that's all I ended up doing today. SPXS, that's all I ended up trading. And when it comes to individual stocks, guys, at this point, like I've been saying, I'm not opening any fresh new swings, and you guys can probably see why. And you know why? Because the market, the VIX, it's at 82, hasn't been there since 2008. And this is not a time to try and catch a solid trend. And I've been saying this in these videos over the past couple of days. So let me know down below in the comments, what are your thoughts on that? And any trades that you guys made today, anything that you're watching heading into tomorrow, I would love to know your thoughts on that. Now, let's just get into some stocks that I'm watching, and in general, let's just do a rundown on a bunch of different stocks to see how they did today. So let's start off with some airlines, because these stocks are the most prone at this point to going BK, bankrupt, right? And they're up at this point $11.25. I saw in what was it, in the group chat right before I started filming this video, I think somebody said they saw on the news how these airlines are going to get bailed out in a couple of months from now. I didn't look into that, so that could be false, but if you guys are seeing that as well, this could be why we're seeing a bit of a spike here after hours in the airlines and throughout kind of the close of the market here. So that is a good sign, right? But still, there's more downside, in my opinion, in the meantime for airlines, but it is comforting to say the least, especially if you're an investor of these airlines, that they are going to be bailed out, right? So DAL is one. If I were to invest in one of these guys, I would probably pick DAL, which is Delta Airlines. This one was down $2.55 today, down 6.65%. LUV down 9.11% today. If we take a look at another big one, actually not really a big one, but Save Spirit Airlines. This is kind of more of a cost-efficient airline, down 23% today, down 3.42, $3.42 there. And when it comes to some of these cruise line stocks, which these have been the talk of the town, right? CCL, RCL, Norwegian Cruise Lines. CCL down 17% today. RCL down 7% today. And NCL, it's not even NCL. What's Norwegian's ticker symbol? I don't even know, to be honest. Doesn't matter, whatever. I'm sure Norwegian was down pretty heavily today as well. So those are the stocks at this point. Boeing as well, guys. Boeing is getting slaughtered. Boeing down 24% today. Holy crap. This one down $40, down to $129 today. These are the types of stocks that are getting hammered, right? The travel stocks, the cruise stocks, Boeing, of course, because it relies on the travel stock, since it makes planes, for these companies. And since they're not ordering those planes, it's not doing so too well for Boeing, right? And another couple of stocks here, Tesla got absolutely crushed today. This is probably one of the bigger red days I've seen in recent history for Tesla. Down 20%, down $101 per share. And do you guys remember in yesterday's video, I was talking about how I'm interested in picking up some Tesla, more Tesla, if we get closer and closer to this $350 to $400 price range. And now we're getting there. We're almost there. $445 per share. That is pretty close to $350, $400. So I'm going to be watching that one very, very closely. Uber today down $2.31, down 10.2%. Square down 30%. Oh my goodness, I haven't seen that till right now. What is going on here with Square? Is there another reason why? Square notches worst day on record. Yes, you can see that. That's the first headline here. What is going on here? Analysts cut price target on Square. Okay, it makes sense. I'm sure it's because of the you-know-what, right? But either way, you've seen in these videos how I'm bullish on Fintech, like I've been mentioning a lot on this channel. And Square is one of those bigger players, at least here in the United States, when it comes down to fintech. So the fact that they've been doing well over these past couple of years, now we're getting down to levels that we haven't been at over the past 3 years. This is getting interesting in terms of Square. Another stock that I'm getting interested in is Shopify, especially as we're getting closer and closer down to that 200, 250 to the lower 200 level if we do end up getting there. I think that's quite an attractive price here for Shopify looking over the long term. Now, let's take a look at some gold, because a lot of people correlate gold and the market, or they think that they have an inverse relationship, right? Market goes down, gold must be going up, right? No, gold has been following the market down. And one reason I can think of is because people are flooding to liquidity. They want their dollar bills, dog, right? They want cash. And that comes from selling stocks, hence why stocks are going down. That comes from, selling precious metals, hence why gold and silver are going down. So that is why we're seeing this price of gold go down. People want cash because hard times could be coming. At the end of the day, gold is valuable, but you can't go to the store. I can't just go to CVS right now with a gold bar and be like, yeah, I need Advil, I need this, I need that. You can't just go and pay with a gold bar. You're going to need to have some cash, right? So that at this point is what people are doing, in my personal opinion. Take a look at silver. Silver was like $14 last time I checked. Oh my god, now it's down to $12. Oh my god. $11.77 earlier today. This is getting insane. So watch all of these in terms of gold and silver. Crude oil as well, guys. Crude oil is extremely important. Down $3, down 10%. Gas here in New Jersey, guys, is like $1.50 at this point, which I haven't seen ever. I don't even know, honestly. Have I ever seen that? I don't even remember. In my memory, I have not seen $1.50 gas prices. So I'm watching crude oil. Yesterday, we talked about drip. 2 days ago, drip at this point had another bad day today, down 30%. But either way, I'm still looking at it. I'm still watching it to see if we do end up getting some sort of bearish reversal on XOP, right? And whenever XOP goes down, that's when drip goes up at a 3x rate. So that's kind of what I'm watching on that end of the spectrum when it comes to drip, XOP, and those oil and gas ETFs. I already talk about SPXS all the time, but I'm watching this every single day, which it simply goes up whenever the S&P is going down, guys. That's how you look at it. S&P goes down, SPX goes up at a 3x rate what the S&P goes down. And the same thing with SQQQ, but it's for the Nasdaq, right? The Nasdaq goes down, SQQQ goes up. And when it comes down to trading volatility, yeah, you can trade SQQQ and SPXS, but TVIX, you can get a higher return trading, but it is more risky, right? Because it moves more with the volatility, but when the volatility dies down, this is the scary part, it actually tanks very aggressively too. TVIX up 76% today, and it pretty much just follows the VIX. The VIX pops up, markets pop down, TVIX in general pushes up in price, right? Same thing with UVXY. This is another way to kind of trade the VIX, that you can't actually buy the VIX. And another way to trade the VIX is VXX, which you guys can see, or is it VXS? Is it XX? Is that the wrong ticker symbol? No, yes, this is it, because it is iPath. So this is another way to trade the VIX, ticker symbol VXX. So we could talk about stocks all day. I advise you to go and just make a watch list. During times like this, guys, the best thing you can do, especially if you're interested in investing long term and you haven't started yet, or you have cash and you have a little bit invested but you want to add more, the best thing you can do is get a piece of paper. Look at this. I have a notebook right here. You see this? And I have a piece of a pen, or this is actually mechanical pencil. Or you can go on your notes on your computer, whatever. Get a piece of paper, do this. Write down the top 5 to 10 stocks that you maybe own some or you haven't owned yet, you haven't bought yet. Write them down and write a couple of reasons for each why you want to own this company for the next 5 to 10 years. Start writing the stuff down because it makes you realize, it makes you realize beyond this whole craziness cycle that we're in right now. It makes you look into the future and realize that we're going to get past this, and the prices that we have here, they could be starting to look like values, right? Especially if, again, you're writing this down, you're visualizing it, and you're understanding where these businesses can go in the next 5 to 10 years. And when you write that down, also write down how much you want to build into that position and at what price. And then when it gets to that price, slowly add into it, right? That is what I am doing. I write things down every day, and that is what I'm telling you guys. Not telling you to do it because you can't do anything I say. You can if you want to at your own discretion, and of course do your own due diligence, but I'm not a financial advisor, so you don't have to do anything I say. But I'm just saying what I do that works for me, and I'm sure it could end up working for you if you write down everything and you really are a forward thinker and you think about what could happen after everything here blows over, because it will end up blowing over. So I'm going to wrap up the video here, guys. If you enjoyed it, hit that like button for me. Consider subscribing to the channel if you want to see further content like this. And don't forget to claim your 2 free stocks. That promotion runs out tomorrow, and those 2 free stocks are valued up to $1,400 with a deposit of $100, and that is linked down below in the description box. And they are from Webull, by the way, which is a great free brokerage that I personally use. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.